What you're telling me is that music is about to stop, and we're going to be left holding the biggest bag of odorous excrement ever assembled in the history of capitalism. 1974, 1987, 92, 97, 2000, and whatever we want to call this. It's all just the same thing over and over. We can't help ourselves.
I say when we sell. Hey, I say when we sell.
We are back with another episode of The Last Trade. This was one of the funnest podcasts we've done to date. We had Tad Smith, former CEO of Sotheby's, and I believe Madison Square Garden, among other firms, on the podcast. It was wide-ranging. He's super engaging, high vibes kind of guy. I think you guys are going to really enjoy it. Quick word from OnRamp. OnRamp provides financial services built on multi-institution custody. At the end of the day, what we provide is our clients and our clients' friends and family peace of mind. No more having to deal with a hardware device tucked in a sock drawer, or having to worry about a third-party custodian send you phishing emails and wonder if your assets are okay. Now, we completely understand that, not one size custody fits all, so you don't have to move all assets over to multi-institution custody. But I will say, signing up, going through our onboarding process, it's self-onboarding now, or you can have concierge. But then getting a test transaction through, doing a withdrawal, and really feeling the power behind having multiple independent institutions have to verify with you over video verification before movement of assets is super powerful. We encourage you to check us out. You can reach out at hello@onrampbitcoin.com or michael@onrampbitcoin.com if you want to shoot us a note with questions, or you can sign up for a consultation, or just, again, through the self-onboarding. Now, I hope you enjoyed the show. We'll talk to you later.
Okay, and we're live. It's The Last Trade. There's 5 of us here. We got some special guests as well. For those who are not on video, we can just rattle off the names real quick. So we have Big Tim Kotzman. Tim is showing up to the podcast today from the backseat of a taxi cab. Tim, great to see you.
Not a police car. It's not a police car. It's a taxi cab.
Not this time. That's next episode. Stay tuned for next week. And so we got Michael as well, Michael Tanguma and Brian Cabellis on the OnRamp team. Gentlemen, good to see you. I see you guys enough, so we don't need your introduction. And then Tad Smith. Tad, it's great to meet you. Just before we hit record here, thanks for joining us today. You're the guest of honor this week. How are you?
Wow. Thank you. It's great to be here, Jackson. Appreciate it.
Excellent. Well, certainly want to get more into your background on the back half of this show, but what we do here at The Last Trade is we always pull up the Bitcoin price chart. And so this was actually, Tad, just so you know, this was a very sad moment for us the past several months, because we just looked at 80K for week after week, what felt like it was an eternity. And then last week we started to see some positive momentum. It was actually, I think it was because Brian wasn't on the podcast last week.
That might have been it.
So finally, we have some green candles to look at. The price is getting close to 100K. Gentlemen, what are your thoughts here? What's driving Bitcoin right now?
Just broader recognition of its inherent monetary properties. I think just people getting educated every day. I put out our newsletter this morning, and what I was really talking about is just, we've said this in the past, but on a risk-adjusted basis, if you consider all of the backdrop, all of the positive tailwinds that are constructive for Bitcoin adoption going forward, 96K, whatever we're at, 97K, is just extremely mispriced. It's in arguably the cheapest Bitcoin's ever been, if you're considering where we are, how we sit here today with government adoption, government support, corporations adopting it. And again, the education is just permeating around, this isn't a tech stock. This is a superior monetary asset that you can store value into the future. And that's really all this is. And I've been saying this for weeks, but, with everything going on, it's really the most bullish I've ever been on Bitcoin. Even when we were hanging out in the 70s and the 80s, it was only a matter of time before we started to move back up. So great to be back in the 90s with you, Jackson. But yeah, this is everything's going according to plan in my mind.
Just week after week, my complaints push the price higher. And so just a quick recap. So it's actually May 1st. We're recording on Thursday. This will come out tomorrow morning. Just to recap what happened in April, it was a crazy time in markets. A lot happened in the span of a month. We had the announcements of the tariffs on April 2nd, all sorts of volatility, uncertainty in terms of trade relations, what was going to happen with the yield curve. Bonds are spiking as well. Where we ended up in terms of asset class performance was gold was about 6% up for the month of April, peaked at about $3,500 an ounce. I think we're sitting close to $3,300. So still incredible performance for year to date. NASDAQ and S&P were both about flat. I want to say NASDAQ might have returned 1% in the month of April. S&P was just about flat. And Bitcoin, 12% in the month of April. It didn't feel like that. In the trenches, in the middle of the month, it did not feel like this is the outcome we're going to have. But Tad, maybe I'll throw it over to you. What do you make of just what happened in the month of April in markets and with Bitcoin?
Well, the context for me, answering your question, is I'm a strong, ardent proponent of the liquidity philosophy and how it drives Bitcoin and asset prices. Whether you credit Michael Howell or Raoul Pal or Julian Battelle, take your pick. And liquidity has been on a monster run in the last 6 to 8 weeks. Gold has been telling you that story. It's sort of front-loaded it. Bitcoin is coming in very strong to catch up. And you could argue the dip prior to the last sort of period of time was baked in when liquidity began to shrink in October of last year. I'm definitely on that train. The fact that we have buyers emerging everywhere, we've got strong secular bullish trends, all of that to me says number go up. And if anything, it feels a little bit like the tail end of the chop solidation we had last year. Except that the liquidity situation's probably even more bullish right now. So I'm not surprised. I think the other thing that I would observe in the month of April, and you put your finger on it, is it was interesting to see the NASDAQ, which is also liquidity sensitive, go one direction and Bitcoin go a different one. And I would attribute that, now this is just armchair, post hoc trading analysis, if you will, if that much. I would say that the stocks in the NASDAQ were much more sensitive to the economic cycle and also, frankly, to the effect of potential tariffs and the uncertainty than Bitcoin was. Bitcoin's essentially immune to it, in my opinion. If anything, it's a positive. And then the final point, and so therefore you would see them diverge quite naturally, whether you call that a flight to safety or you call it a limited flight to safety, which is to say Bitcoin is safe in a tariff world. I'll take that as a friendly amendment from the floor. And the final thing I would pile onto this is that Bitcoin is probably sniffing out that the Fed is going to move. Now, whether they move on rates or whether they move on the supplemental leverage ratio or whether they do whatever was Besson said yesterday, so-called treasury buyback, I'm not sure. Or there'll be some fancy version of non-QE, QE, and Bitcoin sniffing that out.
Yeah, that's a great summary of what's going on. I think you and Brian, brought the sophisticated right side of the curve. I'll go on the other side and say, maybe it's not just fully Michael Saylor, but there's about 9 other sailors in the market currently right now that are heavily bidding this price up and accumulating BTC, whether it's GameStop, what is it, Metaplanet just coming over to the US. And then I'm sure there's no shortage of behind the scenes pre-SPACs that are picking up BTC ahead of going public. So there's a lot of demand, and then you have the tailwinds, as Tad alluded to, with liquidity. We pulled up that chart previously. We've talked about for the past few weeks. Gold front ran that cycle, and we've seen it kind of temper off. And this is, I think, what happened like 6 months ago as well, where gold broke out and then kind of took a step back and Bitcoin ran. And if that's what is ahead of us, we have a pretty exciting next kind of few weeks or months ahead of us.
I came across this chart that reinforces more the relationship between Bitcoin and gold. And so this is from Tefra Digital. And Tad, it really ties into a lot of what you just said in terms of liquidity cycles. Gold tends to front run. But if you look here, it looks like we're just with the price action this week, Bitcoin seems to be sniffing out the increase in global liquidity, which, Tad, I believe you mentioned was the past, 6 to 8 weeks or so. And then, so this is the ratio of Bitcoin to gold. And so you can see here, it tracks over the past 3 years or so through the collapse of Luna and FTX, the initial launch of the Bitcoin ETFs, and you can see what that really dramatically increased the ratio of Bitcoin to gold, which really just speaks to investor ability to get access to this asset class, which previously really felt uninvestable for a lot of people. But I'd argue now, if you look on the right-hand side of this chart here, we've seen a a decrease of the Bitcoin to gold ratio, meaning gold outperforming Bitcoin really in the month of April and March as well, with uncertainty and just general uncertainty around tariffs, recession, growth fear, etc. But I'd argue now we're really poised to see this number or see this ratio go higher because we have gotten through this period now of consolidation and correction in the Bitcoin price. And I always like to joke about this, Tad, because it's kind of a blessing and curse we do this podcast because a lot of it can be redundant, but it's also important to help investors remain convicted in the thesis. And so I could probably close my laptop and never look at Twitter or X again, and I would feel very confident that Bitcoin goes higher because I know the structural situation of the fiat system is more debt, more dollars, more liquidity, etc. But it's good at least to have a pulse maybe for those who don't have the same conviction that we do, that things are looking to improve here in terms of liquidity expanding, which will drive both gold and the Bitcoin price higher.
Jackson, I love that point. I mean, for me, this is the North Star for hodling, and to allow you to hang on during the tough patches. But for those who try to trade in and out or take positions, it's a little bit tougher to use this kind of analysis, the one that I'm mentioning, the one that you're mentioning, because the timing of these things has a high degree of variability. And if you have limited time issues on an option trade or a trading position or any sort of time sensitivity, it's a bit more problematic. But if you step back, you're a diamond hands hodler and you just need that positive reinforcement, this is exactly the kind of chart you want to see and exactly the kind of analysis you want to look at.
Absolutely. One thing I wanted to jump to, I think we wanted to start here, but we got too excited. We got too excited about 97K, so we had to just briefly chat about that. But I want to pull up this clip here, and let me know if the audio isn't coming through, but we're going to take a look here at what the BlackRock CIO said about the digital asset space, and particularly in Bitcoin.
I'm not a deep enough student of kind of the institutional ecosystems in the other coins right now, but in terms of the conversations that we've had with institutional investors, they are really largely focused on Bitcoin right now, particularly in this environment. Ethereum is still a distant second. Yeah.
So we're not even talking about revenue generating protocols or anything like that.
And remember, we're talking about the institutional investors who are broadly in 60-40 equity bond portfolios and looking to figure out what the new sources of return and diversification will be for them. They want both of those, and that's what's bringing them to private markets. It's bringing.
Yeah, it's a great clip. It kind of comes back to we discussed last week with, I think it was the head of institutional on Coinbase's side, referencing pensions, endowments, family offices starting to look at gold as a trade and then indirectly BTC because of its properties. I think historically we've obviously said Bitcoin's digital gold, but that was more of us trying to sell the market versus the market fully like embracing or appealing to that. And with gold's breakout inflationary environment, the 60-40 kind of moving away from a nominal or a real return, now you're starting to see that, I think, liquidity flow from gold's trade into BTC. And that's what I think she's referencing, and the market's also picking up on. And that's kind of the divergence that we saw with the NASDAQ and then hard assets like Bitcoin and gold. And I don't think that's historically been there. We wanted it to be there and on the margins, for the Paul Tudor Jones and Drucken Millers. But for the rest of the market, I don't think that trade has been as at the forefront, but it's starting to become, which is obviously ultra bullish.
Yeah, and the bigger signal from that clip to me is the clear distinction or delineation that she's making between Bitcoin and the rest of crypto. And I think that's kind of what the interviewer's question was trying to get at was, are institutional allocators actually thinking about these things differently? And her answer, I think, is very telling that particularly in this environment of market uncertainty and tariffs, et cetera, people are looking for incredibly neutral stores of value. They're not looking for high beta tech exposure, which I would characterize sort of the rest of crypto charitably as much more akin to technology stocks relative to Bitcoin being this purely monetary asset. And so that was the biggest takeaway from that clip for me is like she's telling you how these people are thinking. They're talking to folks every day. And so that, again, going back to like the education component, like the idea that Bitcoin is truly different than the rest of crypto is continuing to manifest in the brains of allocators across the world. And you know, the key point there is like the reason that's happening is because the 60/40 isn't working. Bonds and equities are going down. So you actually need a real diversifier. You don't need higher beta tech risk. You need something else that's going to preserve value. And so that's, you know, Bitcoin is sort of fulfilling that role that, you know, people who have been studying it for a long time have understood, but the broader market isn't there yet, obviously. And so I think it's just a really clear signal that, you know, slowly but surely, these concepts and these ideas of Bitcoin's true nature are starting to emerge.
Yeah, one thing to call out, it wasn't in that clip, but would encourage anyone listening to go check out the podcast. It was very informative on BlackRock's overarching, you know, Bitcoin, but digital asset securitization strategy. And she referenced something we've kind of like speculated on, that 50% of the flow into IBIT has been purely from retail investors that weren't comfortable with getting access to any other Bitcoin product. And she referenced that in like, I want to say 22, they had initially launched a private placement. And maybe even before then, they were strategizing, do we really want to offer Bitcoin because of its accessibility? It's so simple. You can download a mobile wallet, you know, River, Cash App, Coinbase, but they had to go full circle and realize, well, no, people want the IBIT brand or the BlackRock brand. They want that, you know, security around it, or the wrapper along with Coinbase. But it's interesting because like they saw that they're sophisticated enough to know that there's probably better products out there, but there's also the market that's still coming up the curve. And I think they're going to go full circle and ultimately have to do a bunch of other things like in-kind delivery once the market gets educated. Because the thing we talk about here, Ted, is the ETFs are great, but anybody that builds a material position outside of 2 to 3% of a portfolio wakes up and realizes what counterparty risk looks like in the Bitcoin space, and then they ultimately are going to ask or look for better products.
You know, I agree, and institutional investors are really very different from the mindset, I think, of the retail investor, or even the what I would call the non-institutional family office investor or ultra high net worth investor. And the fundamental difference is, if for an institutional investor, it's not their money. And that is such a key point, because when you are investing someone else's money, you have fiduciary responsibilities, and you have to have evidence-based approaches. And evidence-based approaches often are quantitative. They often have earnings statements. They have cash flows. They have analyst reports. When you think about all the sort of apparatus of institutional investment, all of that stuff is a necessary precondition of investing at a legally fiduciarily acceptable level for other people's money. And so that means institutional investors, everything else, are probably, or at least likely to be slow to invest in an asset that does not produce fiat cash flow. A very important point. Everything else being equal, and so then the question is, why is it that anyone would invest in something that doesn't produce fiat cash flow? And the answer to that is overwhelmingly narrative. The narrative of Bitcoin versus gold, of Bitcoin versus liquidity, of Bitcoin versus safety, of Bitcoin versus counterparty risk, those narratives. And what's so powerful about the ETF and so powerful about the environment that we're in now, and by the way, the narrative has changed dramatically, right, in the last 6 months. Suddenly the regulatory risk around Bitcoin has faded away. So that narrative risk is essentially gone. Liquidity is rising. Safety is a new narrative that's come on. And when you look at the change in narrative from the perspective of an institutional shareholder or institutional investor, it's a completely different situation. It looks a lot more like gold. And that means it's safe for you to put some into someone and to the money that's not yours. And so I look at it and I say the institutional investors are not surprising to me that in this narrative environment, they're prepared to take a gold looking like flyer, well, not really a flyer, but wade into this new pool. And that should probably accelerate as the narrative continues to get better and better and better. But that's a totally different situation from retail, because retail is perfectly comfortable when they're doing their own money, investing in a narrative, or frankly, even investing in a flyer. So back to what Yano was saying, what's the narrative of Bitcoin versus, say, Ethereum versus, say, Solana versus, say, Sweet from the perspective of an institutional investor? Very different. The narratives for those If you're not investing your own money, those are a long putt for an institutional investor.
Yeah, that's really well said, Tad. And the other thing I would point out is, just we've talked about the liquidity conditions. We've talked about this divergence in Bitcoin being more recognized for its true nature. But that if Jackson, if you could pull up that other tweet from Tefra Digital that shows the actual sort of restrictions that are still in place around the ETFs at most banks and wirehouses around the country. It's really remarkable to think that these ETF products were the most successful sort of financial products ever launched. All the capital that's come through them, yet most people still can't access them through their traditional brokerage. And so this is like a massive sort of signal to me that I don't think we've even scratched the surface of what these ETF flows could look like over the next 5 years, despite them being, so, exceptionally performing over the past year. This just tells you that slow moving approach you're referencing, Tad, is certainly still the case. I think Tefra puts out this chart every few weeks, and you see new check marks every couple of weeks, but it is a slow process. And so I think just as these channels continue to open up, as that Overton window continues to shift, and people continue to recognize Bitcoin for what it is, you're going to start to see pretty incredible flows into a lot of these products.
Yeah, one of the incredibly remarkable things about this too is that the Bitcoin ETFs were still the most successful ETF complex. IBIT in particular last year, even with all the restrictions here. So you can see about $30 trillion of assets under management restricted from fully participating in the Bitcoin ETF complex. Despite that, there was $50 billion of inflows last year, right? So, and Bitcoin's a small market still. It's $1.8, $1.9 trillion today. So it doesn't take a ton to move the markets. And Brian, just reinforcing what you said there, we haven't really seen, I feel like it's the first pitch, right? It's not even the full first inning for Bitcoin adoption within the managed wealth space, within the institutional space. Tad, one thing I would love to hear your thoughts on too is particularly on gold in the institutional investment community, because I remember a handful of years ago before I switched over into the Bitcoin space, we would have investment strategy calls. I worked on a manager research desk, so we looked at hedge funds and all sorts of private asset strategies, but we had a monthly investment strategy call. And gold, was never really talked about by the investment strategy team. It was maybe, if you want to express a bearish view on XYZ, you might want to have 1% of your portfolio allocated to gold. But we really haven't been, for several decades, in an environment where people actually think about neutrality, sovereignty as part of counterparty risk as part of their investment thesis, at least from my purview. So would you agree in terms of your experiences, and do you think now that these themes are more in vogue as it relates to allocating capital in the institutional space?
Well, specifically from the institution space, we can pivot to ultra high net worth or retail in just a minute. But remember that in a world where you can do what gold does and do it with an instrument that uncontroversially produces fiat cash flow, a la bonds, you don't have any need to go to gold. Again, so from the perspective of investing someone else's money, the first thing they're going to ask is, well, what am I going to get and when, right? Just that's the client is going to say, what am I going to get and when? So in a world where bonds are satisfying the need to produce the cash flow, you don't actually have to have gold as a narrative at all. What's remarkable about this period and the prior period where gold went parabolic in recent history is the basic idea of 60-40 broke down, and that the cash producing or fiat cash producing instruments were not doing the job. And in that environment, you got to say, and I think, Jackson, for the reasons you said, in that environment, you got to say, okay, well, I need something else. And so it's not going to safely to an institution produce cash flow. So it's going to have a narrative that's tried and true, and take one 5,000 years old that has lots and lots of statistical correlations with unusual periods of event that are risk off and does well. And then, by the way, you can divide every possible financial chart by gold and see every fiat chart in the world divided by gold. We all know what those look like. and you say, okay, well, this narrative is really powerful. It's tried, tested. It's formally an actual form of sovereign currency around the world. So, okay, it's worth a try. I get it. And that's how, in my mind, institutions think, which is I'm going to default to the tried and true. If the tried and true doesn't produce cash flow, I've got to have an absolute rock solid narrative. So.
Yeah, it makes a ton of sense. And those markets are small to begin with as well. There was actually, I wanted to pull up a chart here. It's like if you're managing considerable capital as an institutional investor, you don't want to be moving markets by scaling into a position or in and out of a position.
Exactly.
And so I think that's still a large impediment to Bitcoin adoption is if you look at this, you look in the top right side here, Bitcoin 1.8 trillion. It might be a little bit higher than that today, but it fluctuates, right? And so this was actually a chart of money and then also precious metals, crypto, Bitcoin markets produced by NYDIG just to show that the markets that actually exist for a non-sovereign store of value is incredibly small. I mean, gold is a $22 trillion market. The entire precious metals industry is only 24 trillion. So Bitcoin 1.8, total crypto market cap's about 3 trillion. I think it's down about close to 20% from all-time highs a few months ago. But so these, particularly Bitcoin in the crypto space, will have to actually expand in terms of their market capitalization. There needs to be more liquidity, at least in my opinion, before institutional investors will come in and scale here. But there's really not many other options to go to. I mean, there's gold, and then I haven't really heard much about platinum or palladium outside of a few like niche macro funds that I worked with back in like 2019, 2020. Same with silver.
You know what I love about your point, Jackson? I mean, lots of elements of it I love, but I got to say one in particular. How funny it is that even with the institutions, which are the highly rational investors in theory, right, versus the degens, the number of Bitcoin, for example, has to go up significantly from here in order for them to put money to work, which in turn will make the number go up. I mean, when you think about that for just a minute, meaning it's the price isn't high enough for them to have interest is really what we just said. Now, in a world where the supply could adjust, you would just print more Bitcoin, and provide supply so the institutions could come in. In this world, you don't get that option. In this world, Bitcoin has to hit a certain minimum efficient scale for the very super large institutions to make it to come in a way that adjusts their portfolio results in some meaningful way. And that means, and by the way, we haven't even talked about sovereigns, forget institutions for just a minute. That means we're just beginning. What'd you say? First inning, bottom of the first? I don't remember what you said.
Pitch.
You used baseball.
First
I grew up in Denver.
pitch.
We didn't have baseball there, so I'll say into the first quarter, whatever you like.
Love it.
Yeah, this is something we talk about a lot because that paradox or reflexivity is embedded in a lot of things. One of them is you may have seen this chart. Riverhead sourced it, where you see, I think most people would educated know that this has been a retail driven phenomenon. Our thesis is it'll continue to be for a number of reasons. One is simply because individuals are a consensus of one, so they can allocate much more material wealth than, like you referenced, governance going to getting consensus will take much longer to take that view and then take a larger position. But then also because the individual holds the vast majority of this asset, they are by nature the most sophisticated because they've been in the market the longest. And so they're the ones that are looking for the most sophisticated products. And that's ultimately something that you haven't seen from the traditional, like smart money, Wall Street building products and services. Like the ETF, again, is sophisticated for pension endowment, but for an individual that's holding $100 million, that's the last thing they're going to want to put their assets in. And so from a market structure perspective, it's something we pay attention a lot about and how we build our products, because we're preparing for when the market has more material positions, they get more educated and they naturally are going to look for the same products that the individual, which has never really been seen. And so when we talk with institutional allocators and specifically large TradFi firms, some see our model and are starting to talk about let's maybe incorporating, but others are like, why would anybody ever want anything other than an omnibus wallet full of a bunch of coins? And it's like, well, let me explain why. And so that's a huge opportunity. And I know you said on the investment side to actually invest in products and services that are ahead of that curve.
Exactly. I couldn't agree more. So, all right, the headline, number go up.
Tim, can you point higher for us? just to make sure we're on the same page here.
Tim, what's
Orange
going on with
coin,
this?
good.
What's going on with this tie situation? I don't know if I should feel
Business
bearish
casual,
or
Tim. What is this?
It's opposite day. The price is going up, so there's no possible way that the tie could be long enough, right? I don't know how it would go if Jackson asked me for the tie reveal and how long is the tie, right? I don't have a tie that goes all the way down to my shoes, so there's just no tie today.
I think
Tim,
the audience is going to be very upset about this, Tim.
They
We
might
not
be.
even be able to publish the episode.
Yeah,
Tim,
well,
can you speak to a rumor I saw on Twitter this morning that Nvidia is considering putting Bitcoin on the balance sheet? Was that the other large corporate that your buddy AP Apagus was referring to?
I have no idea. It really seems like a rumor mill at this point, right? So yeah, I as soon as I woke up at 5 or 6, right before I texted Michael for the very first time, right? I saw an account that has a lot of followers, but right underneath the announcement, the comments are like, "Where's your
Source?
source? What's the source? I am the source," right? And I'm like, "Yeah, this thing doesn't have legs as of yet."
Truth is, it to me, it doesn't make a lot of sense,
Hmm.
right? Because when you think about some of the most successful companies in the world, NVIDIA is right at the top of that list, and this for them is a net distraction, if you ask me. I don't know what it would do necessarily to their shareholder base. I'm not sure in the near term. And I think you quoted Saylor just a minute ago, Tim. I think you're spot on. Saylor says really the people that are very young and or desperate are the ones who are appropriate for this. And in the case of corporations, he always points at zombie companies or companies that are shells that are the ones that are right for it. And I think he's right. I think the most successful companies in the world actually can afford to be the last ones to do it. So
yeah,
I
that
don't know
makes a
why
lot.
NVIDIA would be on that list. And if it were, by the way, to me, I'm not an NVIDIA shareholder anymore, but I used to be. To me, if it were, I'm not sure it wouldn't be a sell. Interestingly enough, it would be signaling something to me that's a little strange. So
How about the subsidiary for Metaplan I want coming to the U.S. in Miami? Have any thoughts? I'll throw it over to the group. I'm pulling the tweet up as I speak to it. But so backed by $250 million of initial capital to essentially give access to U.S. markets to Metaplanet. Yeah, I mean, Tim, this is kind of, or Tad, excuse me, this is exactly what you pretty much just said, right? In terms of NVIDIA is going to be potentially one of the last companies to adopt it. They don't really have the urgency or need to, but companies like Metaplanet have seen wild success in adopting a Bitcoin treasury playbook. So, gentlemen, what do you think about this announcement that just came out, I believe, yesterday or today, rather?
Yeah, it just seems like every day there's a new announcement about some sort of corporate adoption, whether it's something like this, launching a subsidiary, or all the SPAC deals that we've seen with 21 Capital, and I know there's a number of other ones in the works. It seems like there's at the margins at least, this is not a widespread phenomenon just yet, but at the margins it does seem like there's people scrambling to get Bitcoin in a vehicle that is accessible to public markets effectively. And so I think, if we're first pitch, first inning, whatever it is, like I think we're just scratching the surface of companies attempting to do this. I think one thing we've also talked about is like, while this broadens the landscape, broadens the access for people with a brokerage account, people that aren't necessarily ready to manage private keys or hold the underlying, that's all well and good. But I think the reality is, people are going to wake up in 5 years and not necessarily want proxy exposure through a levered vehicle. And so I think it's going to be very interesting to see how it plays out. We talked with Pierre Richard last week about this, and our question to him was kind of like, is there a level of saturation? Do we need all of these public companies that are basically Bitcoin proxy levered exposure? Is there a point at which the market just doesn't need all of these different vehicles, and is there some economies of scale that just lead all of the capital to flow towards strategy predominantly? Tad, I'm curious your view there, because we're seeing more and more of this. In your view, do sort of public market investors need all of these different options? Is it, there's obviously going to be differences, right? Like leverage ratios, how much risk they're taking. So there's sort of like a different flavors of these things. But in your mind, is there a saturation point where like the market's like, all right, we don't need all these Bitcoin treasury companies?
Well, they all have the same. Well, let me step back. If they're all shells or approximately shells, I mean, obviously Sailor's got a $500 million software business in it, but they're essentially shells. Then the question is, how do they differentiate themselves? And any market where you have a whole bunch of competitors that have very low levels of differentiation, to me, is not something that's an exciting investment. And so when I look at it, I say, with respect to strategy, stroke Microstrategy, that has, and you said it, Brian, you said they've got huge scale, which, a Sailor doesn't buy into this thesis, at least as far as I can see. But the huge scale will give them things to do other than Bitcoin per unit share going up in the future, and ways to innovate around that I think will be tremendously important. The rest of them, in order to differentiate themselves, they have to be doing something materially different. The thing that has me intrigued, back to your point about Metaplanet, where we started on this, is in terms of their announcement, the story I'm going to tell you may be entirely coincidence, and I'm not being cute. I'm actually just entirely coincidence. So I've been eyeing Metaplanet for a couple of days, thinking, I really like the way it's moving. It might be fun to put something for the kids in there. So I called JP Morgan yesterday and I said, I'd like to buy Metaplanet. And interestingly, I'd tried them about 6 weeks ago. And at that time, they were sort of talking about getting a stock in the Japanese exchange. And I almost lost the will to live. I said, think about the paperwork. I'm not doing that. So then I saw that they have this MTPLF, little OTC ticker now, and it's like $2.93 or something at the current trading price. And it's, by the way, if you look at it's moving up very nicely. And I think Simon's doing exciting things. And, it's a higher beta option than strategy, maybe a little bit around the edges. It'd be worth putting some for the kids. You never know. So I called JP Morgan yesterday, said, can I have some MTPLF? And they looked it up on the screen and they said, I got to call you back. They called compliance and they said, it's an OTC stock less than $5. We won't sell it to you. Flat out. So I sit there and I think, okay, well, maybe if I were Simon Grovich, I would say, well, I would want to be over here in the U.S. with access to U.S. capital and to make it really easy to people like Tad who want to buy some. Maybe this is coincidence, but there's your story.
But they're separated entities, right? It's not like a feeder fund. Like this is completely different because my understanding is Metaplanet's success comes from the arbitrage with that current market and all the other ancillary things. Like this would be fundamentally different. So it'd be trading on its brand recognition alone.
I couldn't agree more. And you have high expectations for the level of information I'm going to take in before I buy.
Yeah, I think that's the interesting aspect of this. It always reminds me of the 0 to 1 book. If anybody has a monopoly, they never tell you it's a monopoly. And then if you don't have a monopoly, you always say you have a monopoly. And so Sailor saying that, he doesn't really have a moat is him telling you maybe he does have a moat. It feels very Pareto distributed. There's going to be a large winner. I like the notion of that's been thrown around as like, strategy was the immaculate conception in the corporate treasury game. You can only do it once. But TBD, but to your point, it's hard for us to, in good faith, be excited about some of this stuff because it all looks the same and it's hard to tell somebody, why don't you just buy spot BTC? But obviously for Bitcoin, and if it gives institutional capital a reason to get exposure, it's good, but it's hard to see the return profile make sense.
And by the way, it's actually worthwhile, not at this point in the cycle, if you still believe there is a cycle. I do believe there's liquidity cycles. It's actually cause for concern. What do I mean? When you have, call it X, more than a dozen, maybe 80, whatever the number of companies is, whose sole focus is to try to differentiate on providing some version of alpha with respect to a Bitcoin treasury strategy. You can imagine that would be an invitation for the marginal person to be adding too much leverage, to be extending themselves too far, to put too much risk into the system, for the hedge funds that are buying it and trading it to be borrowing too much from their banks. All of it intensifies the level of both enthusiasm on the way up and the potential risk on the way down. So, I don't mean I'm bullish on these things. I think things at this point in the cycle look very good. But this is a party with leveraged Bitcoin equity that is going to really be raucous. And, a little farther in the cycle, a little bit bubblier, a little bit more speculation, a little bit more parabolic curves on these assets. And you can bet your bottom dollar I'm going to stand near the door.
Yeah, I mean, you said this in a lot more sophisticated way than I have or will ever, but this is the sentiment I've been sharing internally and externally. Is I grew up with the understanding, there's no such thing as a free lunch, and money doesn't grow on trees, and ultimately, it also, the marginal cost of production things trend to, and if you're printing money out of thin air to buy an underlying hard asset, ultimately that has to go back and mean revert. And
Or as they say, you either run out of money or you run out of air, and neither one of them is good.
exactly.
So,
And then the last part in all of that is more of this is kind of like bird's eye view, but historically in Bitcoin's 15 years, there's always been these centralized concentrations of the capital that are aggregated, and then they kind of diffuse or disperse like throughout. And we never know where the assets go, but they're always just gone, right? You have FTX, you have BlockFi, you have Celsius, you have all these things. You never really know who's holding them. And not to get conspiratorial, but it's just always like funny because we're always like blame it on the underlying, but we never know where the actual, there's a lot of people holding paper BTC that have been waiting for claims for 3 years. And what you just described is kind of a proxy for that, where you have 10 different entities absorb a lot of BTC, they blow up. That BTC goes somewhere and disperses, but you never really, you're going to always point to the animal spirits. You're never going to point behind the strategy. And so there's just a lot of I think a lot of wisdom in what you're sharing that the market should pay attention to, because we're going to get into the animal spirits again as liquidity increases and people are going to forget previous cycles, cautions.
Michael, you're exactly right. I mean, we forget the Fed in terms of liquidity right now is basically tight. I mean, it continues to be tight. I'm not talking about necessarily the rates, although I happen to believe they're too high. I'm entitled to my opinion. Jay Powell actually runs the show. It doesn't matter what my opinion is. But I also think liquidity is a bit tight, and the liquidity you're seeing around the world is mostly not U.S. liquidity, except insofar as the dollar's rolling over and the yields on the 10-year are a little lower because of growth expectations changing. The reason I say that is it's been a while since we had a really, really rip-roaring parabolic move. And it's easy to say we've forgotten. I mean, that little thing we had the fourth quarter of last year, and that was nothing compared to what this thing could do when the Fed starts printing dollars, the whole world wants dollars. And when it starts printing dollars, like really printing dollars, we've had an unusually long period of tough, tight money relatively for the Fed. We're going to forget. Those animal spirits are going to be explosive. And it'll be exactly the moment where we don't want to leave the party.
And to throw more gasoline on that, now you have a friendly administration and regulatory environment to digital assets. And so you're just throwing, like dynamite or whatever the analogy would be on top of the building on fire. And it's just going to be a pretty, it'll be fun for a while.
Yeah. I mean, a perfect example, Strategy, then Microstrategy, was a heck of a lot easier to sell at $400 than it was at $544 last November.
Yep.
What do I mean? It's at $544, even though it's gone up $100, $150 in a week? I mean, you guys would know. It says the FOMO sense is overwhelming. Okay, now's the time to sell. It's just hard, really hard. It's a lot easier at 400, and it sounds kind of a yawn. In fact, what is it, 396 or something today? It's easy to buy and sell today, even on the day of earnings. So, and that's the mindset.
Tad, do you have any thoughts on just, we didn't talk at all about sovereign accumulation of Bitcoin or mining or what, I'm generally just curious to hear your thoughts. We talked a little bit about institutional adoption, but we haven't talked much about sovereigns, central banks. I think it's incredibly early for that, but I would love to be wrong about it. I think it'd be interesting to see what happens if the U.S. moves forward with starting to accumulate Bitcoin in more of a budget neutral manner. But what are your general thoughts just in terms of, I guess my question would be, what do you make of the first 100 days or so in terms of the U.S. policy with Bitcoin and digital assets? And then what are your thoughts through the end of 2025, then however many months that is, 7 months or so, on U.S. policy, but then also just sovereign game theory around this asset class?
So I would characterize the first 100 days of policy by this administration with respect to Bitcoin and the strategic reserve, which is, let's stay narrowly focused on that for just a minute, or sovereign accumulation, I think of Bitcoin strategic reserve as appropriately sober. And what I mean by that is they've launched a study. 6 months is a good period of time for a study. I think they're actually really thinking it through. There are all sorts of dynamics for the world's reserve currency leader to think about a Bitcoin reserve. It's easy to announce the intention. One, they didn't go into the sort of, they didn't do a self-immolation of printing dollars to buy Bitcoin without taxpayer support, without the education, all these different things. They're thinking it through and they're proceeding cautiously. In the meanwhile, they are galloping on the stablecoin legislation, which has clear and present benefits for the US dollar and the US Treasury bill situation. And they are actively working toward some version of what we call the FIT 21, which is the financial market restructuring, or structuring so people will know what a token is, and clarify which regulatory agencies make sense. So for me, the fact they've queued the strategic Bitcoin reserve carefully and thoughtfully, they're not slow walking it because they're actively moving along on it, in my opinion. But it's appropriate that it goes slower than the other two. And now that's a slightly different answer than countries that are in the, back to the Saylor quote, the young and the desperate. The young and the desperate are really all about Bitcoin. And you can think about what countries in the world are both either young or desperate. And in those instances, as long as the IMF in particular makes it hard for them to adopt Bitcoin, then you could imagine a world where those countries are in effect doing some version of a strategic Bitcoin reserve. But what's more likely for them? Honestly, what do they really want? What they really want is stable coins. What they really want is the US dollar and to be on the US and have US dollar currency pegged. In my opinion. So stable coins will be good for them. So I don't see in the near term a lot of countries adopting it, except with respect to what I would call the US dollar adversaries as a hedge. Example, if I'm in China or I'm in Russia, or I'm in a place where I'm concerned about the long-term ability of my ability to use the US dollar in any capacity with the recent weaponization of the dollar, I'm not trying to say anything political. I'm just saying the Biden administration put in place this pretty tough sanctions for Russia after the Ukraine invasion and the use of the dollar. If I'm a country that is often adverse to the United States interests, I would certainly be buying gold for the reason that we said. And I would potentially quietly be accumulating Bitcoin. And the reason is it's almost a call option on the future reserve system. You're not sure how it's going to play out, but the one thing you can pretty much guess is that Bitcoin's going up, and the more of those you have, the more power you'll have, the more seats you'll have at the table to figure out what the final monetary world's going to look like. So that was a long-winded way, but I hope it was helpful.
Yeah, I think this kind of underpins some of that. This chart recently came out. I think Incrementum put it together, but it's showing close to $325 trillion in global debt, money supply, and then ultimately hard assets. Gold and Bitcoin only make up 5% of that. And so in a world full of debt and counterparty or potential counterparty risk, specifically around adversaries, i.e., Russia and treasuries, you may want, possession being 9/10 of the law. If you take delivery of that, you're hedging yourself out from the counterparty risk of the US dollar or corporate bonds or bonds. And so I think this is part of that stacking. I never thought of there's an interesting aspect you mentioned about the IMF, and that kind of ties into what we've talked about as a little inorganic in the hash rate. Like post the past 24 months, it's kind of really, it's gone insanely parabolic where it's been rumored, that certain countries are mining with nuclear energy. And that would be a very kind of like a subtle way to start establishing a reserve without actually buying in the open market by leveraging natural resources. And that goes back to the hungry and young countries are probably already doing this today, some in Latin America and some in the Middle East.
By the way, all of this, at both your point and my point more so than yours, which is more forward-looking even than mine, all of this is call it a medium-term answer, medium-term being sort of 5 years. because at the rate of AI and agentic transactions and the use of agentic AI to conduct e-commerce and deal with currencies, the dollar, some non-digital version of currency, isn't going to cut it. And in that world, again, what I would want to do is I'd want to have some Bitcoin, which is the perfect digital form of capital if I'm a country or a sovereign nation, just to make sure everything comes out okay for my people.
Yeah, if you're a sovereign nation by the name of Italy, apparently we're concerned about Bitcoin. I saw this. I saw this article today. It was the Bank of Italy talking about, pretty much saying that they don't like the pro-Bitcoin, pro-crypto stance that the Trump administration has taken, citing that Bitcoin and crypto assets, with their high price volatility, pose meaningful risks to investors. They also, somewhere in this article as well, it was, I believe, Italy, maybe France as well, didn't necessarily like the idea of pro-dollar dominance via stablecoins. So, Tad, do you think that this is this related at all to the trade wars, trade alliances? Do you see, like, how do you see, I guess, the EU in terms of adoption of Bitcoin, digital assets, stable coins? Do you think that the dollar is going to consume more of that market and global trade via stable coins, or do you think that we're going to see more fragmentation because there's just like this battle between, there's just been this ongoing battle of de-dollarization or not?
Yeah, there's a great book, hat tip to Mark Andreessen, published in 2014 by a guy named Martin Gurri, Gurri, called The Revolt of the Public. And the central thesis of it is the traditional way to think about politics has been wrong for it's been flawed. And the way to better think about it is there are those who believe that the power of the center needs to retain control over all aspects of what a system or social system or economic system do. And the other is the periphery of that system trying to pull power back to the people, to the populace, etc. The reason I say that as a framing device is Europe is the epitome of the center. They are all about a monstrous bureaucracy in Belgium. And even when they're not operating as a monstrous bureaucracy in Belgium, telling everybody what to do, their countries are little versions of Belgium that are telling everybody what to do. So this is exactly the opposite of the sort of philosophy that you have that is sort of Bitcoin oriented, frankly, right? Which is Bitcoin is all about the periphery. It's giving people power. It's giving people autonomy. It's giving people libertarian freedom. It's giving them choice. That is exactly what Europe does not want you to have. What they want you to have is
no
they
power.
Want you to fall in line. They want you to be a good citizen. They want you to go forth and within the framework of their controls, create great tech companies if you can, and employ people. And they want you to have a happy life. And good for them. That's a totally different way to approach it. But is it any surprise that the bureaucrats don't want Bitcoin anywhere near them? The last thing the European Central Bank wants is a population of 300 plus million people running around with Bitcoin or Satoshis, because you don't have enough Bitcoin for that, but you know what I mean. A bunch of sats. They don't want you stacking sats. That makes their life a lot easier, a lot more difficult. So
yeah, and to add what Tad said, they want you to do all that also with no power, depending on what country.
Oh yeah,
you are.
no power, exactly. Yeah. So, look, Europe has wonderful qualities to it. It has the most amazing people in the world. It's one of the greatest museums on earth, if not the greatest museum on earth. It's it's incredibly creative people. I'd rather eat food in Europe any day, but I prefer our policies to theirs for sure.
Hi, everyone. I hope you're enjoying the podcast. Tad was a riot. We're looking forward to having him on other episodes. Quick word from OnRamp. Obviously, you may all know that we provide multi-institution custody. What you might not know is that we offer a whole suite of financial services across the board. Maybe you're not ready to onboard, but your friends or family might need a trusted counterparty that provides them peace of mind as they're buying Bitcoin, or need access to loans, tax advantage accounts via IRAs, or just the ability to get access to our private client services so they can get white glove treatment, virtual family office, access to private equity exposure in the Bitcoin ecosystem. If any of that's appealing, please feel free to shoot them a note, share this podcast with them or our website. And as a quick reminder, if you like and subscribe to our YouTube channel and via your favorite podcasting app, it goes a long way for people to find the high signal in the space.
Well, where do we go from here? So we've been recording for close to an hour now. I don't know if any of you guys wanted to flag some topics we didn't cover already. There was the Charles Schwab CEO, which could be interesting, but yeah, Michael, go ahead.
Yeah, before going in transition, I think any topics that rattle off a lot of the public market stuff that's going on. I think Galaxy either filed is coming or is filing to come to the U.S. Schwab announcing, I think, getting a little bit louder about the launching crypto trading. There's a few others on the banking side. I think rumored potentially Ripple. I think Ripple's been rumored to almost by everyone, but with Circle, there's a lot of like at the highest level of finance positioned, or the table's being set for what people are setting up for this new administration, the liquidity flow coming in. So I think Tad or anybody just chat a little bit about that, because I think it's the complete opposite side of what we just talked about with Europe, in the sense that something we've talked about for weeks, that we know we're coming into an inflationary environment. People need to hold hard assets if they're going to come outside of that and have, a purchasing power to buy things. And I think the US knows that. And that's part of this new strategic version of getting Bitcoin in everyone's, IRA or ETF or just spot. So it is promising to see the innovators in the highest levels of finance trying to embrace that, but also just curious on where the risk lies or who's doing it right, who's not.
Well, I think it's going to be, for me, a pattern of let's experiment and innovate, and if it works, keep doing a little bit more of it, keep doing a little bit more of it, keep doing a little bit more of it, and if it doesn't work, adjust. I'd rather see that, which I think is a very sustainable. It's like the difference between a melt up in the stock market or in the crypto market or Bitcoin market, rather than a parabolic move. I don't think we need parabolic moves. We needed to roll some bad things back parabolically, swiftly, and they did that. But now in terms of innovating going forward, I think we can move at a healthy pace. And I think a Galaxy coming here is terrific. Novogratz is great. I think he's got a great firm. I think all of those adjustments make sense. The one thing I would say, which you didn't mention, Michael, if I may, is by the time this podcast comes out, but at this moment, we're still 2 hours or 1 hour and 53 minutes from the close today. And tonight is Strategy's earnings. And we do have Tim Kotzman on the phone. Don't you think we ought to get him to commit himself right now before the earnings come out about how that's going to go and what's going on? Don't you think?
I think so.
Yeah.
I think we ought to ask the maestro. What's your prediction, Tim? When this is aired tomorrow, they're going to be able to listen to this and then look at the screen. And what are they going to see? What do you think?
They're going to see a V-shaped recovery, like every single time with Bitcoin, with MSTR, right? You'll have the Curtis Dales and the Peter Schiffs of the world posting their posts, and then you'll see the after hours and tomorrow morning, the price trying to tank and then just ripping right back up. I mean, just
okay,
a tail
so
as
last
old
big
as
one,
time, meaning
okay,
the last 16
The last
years.
big one wasn't his 21 plus 21 plan back in November, if I'm not mistaken. Do you think we're going to get a $21 billion ATM at the equity, or is he going to double down and go for more?
Yeah, I was going to say 21 at a minimum. Wouldn't be shocked to see 42 or whatever 42 times 2 is, or $121 million.
42 times 2 is, if he actually does an $84 billion equity issuance at the market, that may be a V, but my prediction is it'll be a deep one.
Yeah, or $121 billion ATM. I think anything's on the table. So it'll be interesting to see what happens at 5 p.m. Eastern Standard Time. I'm sure you can find watch it on your own or find a group on social media that's doing a watch party. That's how big this is.
Tim, give us some insights into what's going on in that world. This is something that I personally don't follow as close. I know the conference is coming up in the next couple of days. You got different derivatives. There's the MSTY, other publicly traded. I guess maybe on that, what's going on, but also what's the sentiment like with the new 21 launch, and how do people feel about that, from a flow perspective and interest from that segment of the market, the True North market?
Well, we had an awesome True North call last night. I invite everybody to go watch that. Dan in particular was kind of on fire with like just different theories, and even mentioning Joe Burnett, I think actually came up with this idea of if you think that strategy does not actually own any Bitcoin, then you can like short the stock but long something else, and like it was a very interesting way to basically still get 10% and be hedged in case strategy doesn't have any Bitcoin, right? Which we believe they do have a lot of Bitcoin. Um, as of this morning, I think what is it, Cantor Equity Partners is like 5.2x MNAV. So that's an interesting story. Last night, I kind of lost my cool a little bit and said, look, we can stop talking about GameStop until they actually put Bitcoin on their balance sheet, right? It's a little too much free press. The vibe is off, in my opinion, there. And yeah, there was something else that I'm missing.
Conference coming up.
Oh yeah, the conference, the first ever True North World on Cinco de Mayo. So Monday, that'll be a lot of fun. I
Sold
think we'll
out.
have it's sold out. I think about 150 people. We have uh like a whole page full of sponsors. Of course, the sponsor ticket was only $500, but you know, when you see UTXO and Deloitte and some of these other names up there, you're like, "Woo, all right, we're in business." As far as just getting to know people, and so that'll be basically a 4-hour podcast live, right, 12 to 4. Then the strategy party, then the True North party. So that'll be a lot of fun. Yeah, I'm hearing from people that people are just you know coming into next week in Orlando very business minded, right? People are um, all the things that you've touched on so far in this show. They're looking to raise capital. They're looking to build relationships. They're looking to, I mean, everything from building a business to trying to get a job to trying to get on a board. I mean, it's like up and down and all around, just people really getting in position for, I think, what's about to happen. So I think that's super interesting. I think the what you guys were talking about a little bit earlier, maybe it's not attractive from an investment standpoint for the 500th Bitcoin treasury company, but it's probably still interesting to them if they are the web design company and the only one that's putting Bitcoin on their balance sheet. The interview I put out yesterday on the Treasuries pod is actually literally that, a web design company in the UK. I think it's a $6 million business. If you go to the Bitcoin for Corporations handle there, they're doing announcements about adding 2 or 3 or 4 Bitcoin to their balance sheet. But if they're the market leader in that segment, what does that mean as the CAGR on Bitcoin goes down? Do they just dominate that sector and obviously just do whatever they want? But as an example, maybe it'll get an investing audience. Maybe it won't. But a lot of what we talked about last night on True North was, if you're going to not buy more Bitcoin or more MSTR shares, and you're going to allocate to something further out the risk curve or with a different risk profile, it's just something to be thoughtful on. And then quickly on the structured product front, if Bitcoin is the hurdle rate and Bitcoin is just the best performing asset for the foreseeable future, call it the next 5 years, the next 10 years, I think there is a place for all of these products so that investors can become educated and analyze what's the best product, and between a suite of products, really build their new portfolio. If the 60/40 is on the way out and Bitcoin's on the way in, but you still have everyone having different needs, I think, right? Just dialing in those different volatility factors through these different structured products could be, is very powerful and will continue to be so.
Yeah,
So
one angle of that is, if you add the president's son to your board, that could always help in the
Yeah.
profile of the corporate strategy. That could be a differentiator.
one of the things I struggle with by the way, I 99% agree with my buddy Tim here, is if he and I happen to agree, by the way, about the hurdle rate, that's appropriate to use for people who, in effect, are selling Bitcoin to do something else, to invest in something else. When a company undertakes a leveraged Bitcoin equity strategy, think about how the dynamic of how they allocate capital inside the company becomes. On the one hand, they can put capital into their Bitcoin treasury strategy, which is growing between 40 and 50% a year, depending on which internal rate of return you want to use. On the other hand, they can put it in, I don't know, a web design business or whatever else the other business is. How many businesses in the world are delivering a consistent, volatile, but consistent internal rate of return at the rate of Bitcoin, ... without doing any work? Think about that. Very few. So the moment, and this goes back to the NVIDIA point we made, the moment you bring Bitcoin into a treasury strategy, from the perspective of a classic corporate machine, if capital within the corporation is being financed externally and then going to the most exciting investment projects, Bitcoin inside the machine will suck all of the capital out of all the other projects that don't perform at the level of Bitcoin. The treasury strategy, by definition, will eat the whole enterprise from the inside out. Now, if you aren't in that capital, if you are simply outside, like investors we all are, we are already making that decision. Why would I want to invest in, I don't know, X company, General Motors or Eli Lilly, I'll make one up, when I could put it over here in Bitcoin? And that, to me, is for me, a higher return on capital. The same problem, once you're inside a corporate hat, you have the same problem. So I find it very difficult to see that companies that have businesses other than the Bitcoin's treasury strategy, unless those businesses are the rare few on earth that are effectively money printing monopolies, will be able to sustain and grow a Bitcoin treasury strategy if their capital allocation process is thoughtful. I don't see how it works.
Yeah, Ted, I like you. You know, we hadn't met formally, but you effectively just described how we built this business on a Bitcoin standard, and then we spun out a venture firm that's Bitcoin denominated. Tim is an advisor on, but it was with that exact understanding that when you look at every preference when you're building a business, from hiring to how you spend on ads or whatever underneath the sun. It's not to say you don't spend the money, because that's what it's for. But you need to make sure you're more discerning and the return on capital is higher. And the realization was that the incumbents have too much pork and fat built in. And so the firm's called early riders, because the early adopters of the strategy are going to leave the firm because they won't be listened to. And then they come build with us on that standard. But when you build on that standard, you're inherently more efficient, and you're going to outcompete the others, not only because you hold a better form of money, but constraints are the design surface of the world. And so when you put constraints on yourself, you're going to come to the most efficient outcome. And that's how we actually rebuild. So that whole imploding happens, and in parallel, we're going to build on a better standard, AI and Bitcoin.
I love that.
Yeah.
That's awesome. And by the way, give it 5 more years and you can be sitting on the beach and your agentic AI can do it for you. The only other thing I would say for people who don't care about MicroStrategy but care a lot about Bitcoin, what Tim was talking about tonight is really important. Also, because if Saylor comes in not 21 billion but 42 billion or 84 billion or whatever billion it is that he does as an ATM, that is new demand for Bitcoin, and not a little bit. So up and to the right, as Tim famously says.
I guess I'm going to go to the beach for the next year. You're here to hear it.
Make it a good beach. That's the advice. No financial advice today, but the only advice I have is make it a good beach.
I love it. One thing, Tad, that we do on every episode, there's actually 2 more things I want to do. I want to do quickly the single point of failure of the week. And so I'll explain that in just a second. And then I want everyone to be prepared to have maybe a bullish and a bearish thing that they want to share, just quickly. And Tad, if you're interested and you want to, would love to just hear a little bit more about your background if you have the time. So you think about if you want to do that or not, while I just pull up the single point of failure of the week, which is, dun, da, da, da. Here we go. Ledger confirms physical scam letters requesting seed phrase in fake security upgrade. So I actually think this ties into the Charles Schwab CEO interview of this week. So ultimately, Bitcoin is perceived to be uninvestable by many people still because of maybe they're not opening up the block, but they're opening up the Journal or Bloomberg and they're reading about the couple that loses $5 million of Bitcoin because they throw their hardware wallet out, or they read headlines about FTX or whatever the next FTX will be blowing up. And this perception just plagues investors, both retail and institutional, because what's embedded in investing in Bitcoin is not necessarily, oh, I invest in Bitcoin and it goes to zero. We all think it's not going to zero. I think we're long past those days. But what's even worse is I buy Bitcoin, I'm right about the investment thesis, but I mismanage the asset. And so ultimately, it's probably worse to make the allocation and then one day not have the allocation anymore because you lost your device or you end up on the next FTX. I think ultimately this ties into the Schwab news because the CEO said very confidently that they would be the premier firm for crypto or something along those lines. And so they actually want to launch a spot Bitcoin and perhaps other crypto asset trading custody solution within the next 12 months. And the CEO mentioned that their clients trust Schwab, right? And so naturally people may want to hold off on making an allocation into the space until they actually can work with a firm that they trust. And so this is something I don't think any of our audience would necessarily fall for a scam like this, but the unfortunate reality is a lot of people do. I think somewhere in this article, it may have mentioned, or it might have been somewhere else, the amount that was scammed in similar manner last year. It might have been $12 billion of Bitcoin and crypto. So
Can I just pull something really quick up? Because it
yeah,
just basically, it'll make it more, this is similar from the block. This is unrelated. I mean, it's definitely related, but it's different incident. There was an elderly person. They probably weren't always elderly. Maybe when they bought this, they were a little bit younger, but they lost $330 million in BTC. This was a phishing scam, I believe, or social engineering. I'm sorry. But it goes to Jackson's point that there's just a lot of education still coming into the space. Yeah, this was social engineering. Um, and yeah, it's just do your diligence, make sure you know who your counterparties are, and don't pick up the Google phones or the emails that get sent that say reset your password. Or I think yesterday I got hit with a firm. I won't mention the name of the firm, but it was like it was obviously a phishing email, and they said, pull your assets off to like another wallet. The level of sophistication when it comes to hacking as this asset grows, we're only at 2 trillion today market cap for BTC. What happens when it's 5 or 10 trillion? It's going to be the Wild West. So just be vigilant.
Yeah, I think that's good advice. I mean, for me, it's a very real question about, do I fear the sort of counterparty risk that I, in theory, make myself immune to by cold storage on the one hand, or would I rather just have it at my, in an ETF form at JP Morgan and know that I'm going to call them? Now, one is so analog and ancient and almost boomer that you got to laugh at it. But think about it, it's not so much that, it's the relative level of security. And and by the way, you don't even need to be hacked. It can just be an error. I'll tell you, I have been sitting on an email literally for 3 weeks from Coinbase, because Coinbase is taking their wallet where I have my NFTs, and they want to merge the assets in that back into the Coinbase main app. And I got to tell you, this is just, I want to get in there and deal with this like I want another hole in the head. I know that I've got some, I've got some nice NFTs there, and I don't know how, I'm going to send them back to this thing. This is just a total nightmare. One thing I know is I'm going to send them out of the wallet and they will not be in the Coinbase account. Wait and see. And this is not even a hack. So I look at that and I say, security has many different dimensions depending on the cohort that we're talking about. And people that are absolutely fluid coders think cold storage is an absolute slam dunk and I'm a complete idiot. On the other hand, it's tricky. You really do. The cohorts are very sensitive to different aspects of security. And so it's all around us.
Is it Schrodinger's cat about it being alive? Is that what it is?
And by the way, the famous book that I also recommend, in addition to Revolt of the Public, is called What is Life, that he wrote. It's about 120 pages long, and it is extraordinary.
What is it? Can you say that again?
What is life
What
by
is life?
Schrodinger?
Okay, so
Yeah.
we'll have to look that up. The reason I brought that is because there's a 1.5 trillion. I know you guys or your firm's a very large investor in Ledger, and this is where the majority of assets sit in that 1.5 trillion. And folks that have like certain amount of assets will upgrade to our product. They usually diversify, so they'll park some in multi-institution. But what's come up increasingly is like inheritance and all the things associated. They're like, no, I got it. Like I got it, but I need to do this for my wife or loved ones. Like, okay. But what's come up is they haven't touched the device in like 3 years or 5 years. And so generally, it's like to your point, it's the last thing you want to do because you're always in sales, right? Competing with the status quo, and the status quo is just doing nothing. And I came up with this like it's like Schrodinger's box in the sense of like you don't know if the
100%.
assets are still there. So if you don't touch it, they're still there in your mind, but you're afraid if you go touch it, they're not going to be there. And similar to your circumstance, you're like, if I don't do anything, I think I'm good. But if I go do something, now I can mess everything up and go to zero. And so that's been an interesting and a shill for us. We help in that whole process. But it's just such a key thing. And you bought it at 10K, now it's 10 million. And you're like, man, I don't want to deal with this. It's still there. If I don't touch it, it'll always be there.
Yeah, I 100%. So, in fact, the best place to keep my art, I think, is with Pascal, point of ledger. I think you're exactly right. But I just need to get it over there. And I fear, all the sort of steps I need to go through to do it. And all I can see is my art disappearing and not being recoverable. So I'm terrified.
Yeah, and so I know we're coming up on time, but this ties in a little bit of your background. Would love to hear a little bit of the Sotheby's journey in particular and how that led to digital assets, if it did. And the main reason why is because in a different life, I worked for a high-end auction company for a very small time, and Heritage was the place we actually sent numismatic coins up in Dallas to. And so I was always familiar with Sotheby's. And I kind of took an accelerated approach to Bitcoin because being younger, I collected like baseball, basketball cards, and then Pokemon. So I knew scarcity. And once I heard 21 million and having to be in like the auction business for a little bit, it was like, well, of course this thing has value. It's just now you have to underwrite how much value it has. And well, it happens to be almost everything. And was always wondering if that was a product of kind of what influenced your journey to understanding this space, or was it something completely unrelated?
Michael, you said it better than I could have. There's literally not a ray of light between what you just said and my journey. None. You
Nice.
nailed it.
Yeah. Yeah, scarcity. I guess it's just the thing that makes us all tick. And then once you get it, now you just have to figure out how scarce is this thing and how much does everyone else want it. And if it's super scarce and everybody wants it, well, then there's value.
And as you
It's not, yeah.
implied, and as you implied, and I was alluding to earlier, in parts of our economy or assets where they don't produce fiat cash flow, narrative drives the price. So that's how you can sell a Picasso for $20 million, which is paint and canvas. It's the narrative. And by the way, you can have two Picassos that look almost identical, and one will go for 20 and one will go for 2. And what's the difference? The year they were painted. Narrative.
You know what the kids call it these days? I like to. It's all vibes. It's all vibes. You get
Well,
masa, and you get some tether, and you get some loud guys, and now you got the vibes for the next big thing.
but they're right. I mean, think of us as a species. We're all about the vibe. We are. So, and by the way, anyone who invests on Wall Street and is very focused on the analyst reports and the earnings and the PE and all that stuff, if they don't think those stocks are vibes, well, then they haven't seen the list of the highest performing stocks in the first corner in the S&P 500, which, as I recall, Palantir's right at the top.
Yeah, the
So there you
strongest
go.
strongest vibes is Tim Kotzman. He came on the scene, and the vibes just have been getting stronger week after week. Him showing up.
Do you know my first talk with Tim Kotzman, and this I'll never forget because it was November 5th, it was election day. So I've sort of got it always sort of logged into my mind. It was election day.
Your
So
life changed forever that day in more
in
ways than one.
so many ways, Brian, so many ways. So yeah, I have been the CEO of Sotheby's. I sold that company. I am a partner in One Roundtable Partners and 10T Holdings, which, as you noted before, I'm the former CEO of Madison Square Garden. And I've had a long career basically at the intersection of technology, disruption, and creative businesses and a whole range of things. But honestly, Michael, I couldn't improve 1 minute on your statement of how you came to Bitcoin. Mine's exactly the same, which is when you understand that value is what we say it is, then it's very easy to see that a piece of code could have tremendous value. So you got it.
Nice. You nailed it.
Well, I guess we could wrap it. I don't want to go over. We didn't do the bullish and bearish, but I also want to be respectful of everyone's time.
No bearish takes this week, Jackson. We're back in the 90s. We're rip roaring.
I will say WorldCoin coming to the U.S. is a little bearish, but we'll save that for another time.
The only reason I'm bearish is because next week you're going to see some things that are going to make you even more bullish. I'll leave it at that.
All right, Tim.
You'll definitely leave it at that, Tim.
The only reason Tim's bearish is because we're not bullish enough. I got it.
Well, Tad, thank you so much for joining us this week. It was a lot of fun.
I really enjoyed it, guys. Thank you.
Yeah, appreciate it,
Thank
sir.
you all. It was a pleasure to be here.
Yeah, this was a lot of fun.
Thank you.
Thanks for listening to this week's episode of the show. If you found the information valuable, please share the episode with a friend or leave a rating on your favorite podcast app. All the links we discussed in today's show will be in the show notes inside your podcast app. Before we finish, a quick reminder that OnRamp Media is for informational and entertainment purposes only, and nothing should be construed as investment or legal advice. Regardless of where you are on your Bitcoin journey, we'd love to hear from you. Visit onrampbitcoin.com/contact to schedule a consultation with one of our private client advisors.